Everyone, it's Blake. As always, none of this is financial advice. This video should help you get prepared for this week's trading, give you a little bit of how I'm reading this market, how I'm preparing, and also a little bit of technical analysis to go along with all of that. So let's get started here. We have the S&P. As you guys know, this is a daily time frame, and we have been in a prolonged bear market, right? So whenever we are in downtrends and no trends, the priority is always preservation of capital, and if you have them year-to-date gains. We've had two uptrends. We had a really nice uptrend that paid in mid-March. This was a very fruitful uptrend, and then this uptrend back here was, not short-lived based in time, but we only really had 3 days that you could actually get paid. So if you weren't scaling and putting in stops, probably really difficult to make money in this uptrend. So one thing to note is all uptrends are not created equally. And this past Friday, we had a nice rally across the board. We gapped up and then continued to push higher throughout the end of the day. Still pretty far deviated from this bottom of this cloud, which is the 10-day moving average. And so what does this mean? Does this mean anything? Well, I think longer term, we're still in for some more downside, more than likely. But I think that this does have some potential meat on the bone. We can maybe come up here, squeeze just above the 10 SMA, trap bulls, and then potentially roll back over for another test of these lows. Not predicting the market, but I think that's likely the most probable scenario, because from here, a V rally up to the 50-day I think is very improbable. And, maybe we come up and fill some of these gaps before rolling back over. So that's kind of how I'm playing this market. I'm not getting too aggressive. So the reason that I say that, and not all uptrends are created equal, is because we're in a bear market. So until we can get back above this cloud, I'm not going to be getting aggressively long, right? So, right now it's roughly 430 on the S&P. I think above 430, we can talk about getting aggressive with our swing longs and putting on leverage. But until that, I'm still going to be very cautious and have my bear market thesis until we get back above that cloud. So I think, the likely scenario for this next week is maybe we come fill some of these gaps, get people, FOMOing, thinking that this is going to run, and then maybe roll back over. So I say that because I'm not going to be getting aggressive if we start closing back above the 10 SMA. So you guys know that follow our system. Technically, a close above the 10 SMA, you have rules to get long. You can get long, but your higher odds exist with a close above that previous day's high. So 2 days closing above the 10 and above the previous day's high, that's uptrend. That's when we get long. And if that happens, I'm going to be very cautious with my sizing and my exposure. I'll probably take the trade because that's our methodology, but I will be taking the trade with much smaller size and with much lower expectation. So I wanted to preface that. So let's take a look at the Qs, the NASDAQ. So I thought something was interesting. You guys know I do a lot of stuff with volume and price patterns and Fibonacci's. So these are the COVID lows to the recent high back in 2021. And you can see this is the 50% fib retracement that we came and tested perfectly on Thursday of last week, and then Friday gapped above. So this 50% fib is significant. So we'll keep a close eye on this. If we break below this 50% fib, I think it's a very high odds trade, and it's difficult to get short and press short down here because we're already so overextended. But I think if we break this, 286 on the Qs, I think it's very probable that we come and test this 258, this 618 retracement on the NASDAQ. So keep an open mind for that, all right? Definitely some scenarios that could play out here. We're still in a massive downtrend, so odds are favoring lower. And it's tough to press at breaking these lows. So if you do, make sure you're giving yourself plenty of room to breathe on that trade, and then also make sure it's a much smaller size because it's not a very I just don't like being short the market. We'll put it that way. Let's take a look at Bitcoin and crypto. Bitcoin testing a very significant level. Let me see if I turn on my drawings, if they pop up. Okay, got drawings off. Let's highlight an area of price area inflection point that I call these. So just an area over time where a lot of shares have traded hands. We've traded at these levels multiple times over the course of almost a year and a half, right? So over the course of almost 18 months, 15, 16 months, this is a very important price level. This 30,000 area seems to be a very important level. If we break below this level, you can see how quickly we ran up. So if we break below this level, I don't foresee much volume coming in to support. So this could go lower. So keep a close eye on that 30,000. How much lower? I don't know. I would think that it wouldn't go below 20, but you never know. Crypto is obviously a volatile asset. And you guys also know that long term, I think Bitcoin and Ethereum are much, much higher. If your time horizon is anywhere above, 18 to 24 months, maybe not 18, anytime between 2.5 years, I think we're much, much higher than where we are today. Take a look at Ethereum. Similar story, from the previous pivot low that we put in September to the highs. This 618, this is a important level that we're testing, this 2,000 area. We're hanging out right there. And also you can see previous price history at this level as well. So, 1,900, 2,000, very important for Ethereum. I would like to see this hold, right? But, below that we do have maybe 1,700 and maybe this 1,200 area as well, if that goes. So I'm just giving these levels out to mentally prepare everybody. If you haven't been through a crypto bear market, they can really wear you out if they don't scare you out. So just trying to be mentally prepared for anything is what I'm trying to help assist. Finally, I want to take a look at gold. Gold is not doing how I expected it to. Probably going to be rolling out of this in our investment portfolio and potentially moving more into energy. So energy is the lone bright spot in this market. Let me go ahead and remove this. Energy has been really strong. All time frames are still very bullish. Monthly time frames bullish. The weekly time frame is bullish, and then the daily time frame as well looks pretty good. And that's saying something because the indexes are bearish on all time frames. So we're in downtrend on the monthly, weekly, and daily time frames on the index. And so it's difficult to try to find areas to park cash when bonds are looking as bad as they do. When the NASDAQ looks as bad as it does, and when gold isn't performing very well either. You're hard pressed to find areas of the market where you can safely park capital and potentially outperform and create a return. We'll be taking a look at that this weekend as well. But just to wrap up, S&P, very low expectations for this week. We did have a nice close to the week. Like I said, if we do start closing above this cloud, I'm going to, take it really with a grain of salt. I'll take the trade. But I'm going to be taking it with much smaller size because of the market environment that we're in. I think it's likely that we come back and do roll back over just based on price structure and price formations. So, hope that video was helpful this week, and I'll see you guys on the open.